Hello everyone. Welcome to another video of the monthly analysis of Indian share market. In this video, I'm going to share my analysis of the Indian share market's performance for the month of November. I'm going to talk about these 7 points. I'll share the headlines of the months, both domestic as well as international. We'll then see the key market indices performance followed by sectors performance. We'll check out the IPO and other market activities. We'll also check out the gold, silver, currency, and oil prices variations in the month. We'll then see the top 10 global economies performance for the month of November. And finally, we'll see the future outlook and conclusion for the month. So let's see each of these points in some detail now. Before moving on, please read the entire disclaimer carefully. So let's start with the headlines of the month and that too from Indian market. First is the Nifty and Sensex hit all-time highs. Bull run driven by narrow leadership, not the entire market. India USA trade deal still not yet finalized. Eased crude oil prices and mixed Q2 earnings wrap up. Let's check out the international market headlines. Fed rate cut hopes drive Wall Street rally. Divergence in US and European economic data. Bank of Japan rate hike speculation. Bitcoin and crypto market slump. And finally, slowing economic momentum in China. Let's move on to the next point, which is the key market indices performance. So this graph shows the performance or the returns of the five broader indices of the Indian share market for the month of November. Nifty 50 has given returns of 1.92%. Nifty Next 50 negative returns of 0.94%. Nifty Mid Cap 2.12%. Nifty Small Cap negative 3.3%. And Nifty 500 1%. So I would say, as I mentioned earlier, it looks to be that the specific stocks have given good returns, but the market in general doesn't seems to have that much of breadth at the moment. You see Nifty Next 50 negative, Nifty Small Cap 250 negative 3% return, 3.3% return. So selective companies are giving good returns, not the overall market in the month of November. Let's hope that this changes in December and the entire market starts to give good returns, because it's more than a month, more than a year now since the Indian market has given any returns to the to its investors. Let's move on to the next point, which is the sectors performance. Now this graph shows the performance of the major sectors in the Indian share market, and as you can see, there are several sectors which have given negative returns, whereas there are several sectors which have given positive returns. For example, capital markets was the best performing sector with 5.66% returns, followed by IT with 4.77% return, PSU Bank 4.03, and then pharma, auto, and bank. These sectors too have given very good returns in the month of November. Now, on the other side, the sectors which have performed poorly in November was reality sector minus 4.69, media sector minus 4.38. Then we have metal minus 2.96, PSE minus 2.78. So as you can see, there are several sectors which have performed poorly as well. So as I mentioned earlier as well, it looks like the returns are specific to some sectors, specific to some uh, stocks at the moment. Now let's move on to the next point, which is the IPO and other market activities. To start with, first of all, let's look at the IPO space. So in November, there were nine main board IPOs which opened up for subscription. 12 were listed. In SME segment, 13 IPOs opened for subscription and 10 were listed. In OFS space, there was only one OFS, which was of Tomev Construction and Infrastructure Limited. Now, SEBI took some very important actions in the month of November. First is the REITs reclassified as equity. Now, SEBI announced that mutual funds and specialized investment funds investments in real estate investment trust, that is the REITs, will be treated as equity related instruments effective 1st of January 2026. This move is designed to boost participation and align Indian market practices with global norms, though InvITs remain hybrid. That is another important point. So REITs have been reclassified as equity, but not InvITs. Next is the caution against digital gold. Now, you might have encountered several platforms starting selling the digital gold thing. SEBI issued a strong caution to the public regarding dealing in digital gold, advising investors that the platforms is unregulated under the current securities market framework, emphasizing the associated risks. Okay, so because of the steep rise in the gold prices in uh, September, October, rather throughout the year this year, several platforms have come up with the digital gold thing and they are selling those things. So SEBI has clearly issued a warning for the investors. Next is the ban on stockbroker for violations. SEBI issued an inquiry order prohibiting a major stockbroker, which is Prabhudas Liladhar, from taking on any new assignments for 7 days. And why did they do so? Because due to multiple rule violations, including the misutilization of clients' funds. So even if such a prominent brokers can do that, you cannot trust anyone what they can do. Anyways, fourth is the warning on unregistered online bond platforms. A public caution was issued regarding unregistered online bond platform providers, reminding investors to only deal with SEBI registered intermediaries to ensure safety and transparency. So again, very important thing, because of diversification narrative which is going on these days, all the investors basically they are looking for some diversification in their portfolio, and they are looking for bonds to be a part of their portfolio. So SEBI has issued a caution for that as well. And next is the miscellaneous. Now, FIIs were still net sellers with 17,500 crore rupees net sell in the month of November, whereas DIIs are net buyers again with 77,000 crore of net buying in the Indian cash market. Mutual fund SIPs keeps on rising. So the October data, which came up in November, is 29,529 crore rupees SIP in the month of October. The data was shared in November. And the Bitcoin price dropped significantly. Uh, Not just Bitcoin, almost all the cryptocurrencies basically crashed in the month of November. And the Bitcoin was trading at around 81 lakh 79,900 rupees by the end of November month. Let's move on to the gold silver prices. Gold, it closed at around 1 lakh 29,820 rupees for 24 carat per 10 grams. The high was 132,294, whereas the low was 121,480. So gold prices uh, uh, dropped a bit in few days in the month of November. Let's check out the silver prices. So silver, it closed at around 1 lakh 73,000 per kilogram, and it reached a high of 1 lakh 75,340 and a low of 1 lakh 50,000. Again, silver too dropped significantly in the month of November, few days in the month of November. Let's check out the USD and INR conversion. So the it closed at 89.43. So rupee deteriorated significantly in the month of November. It went as high as 89.66 and as low as 88.16. Okay, let's check out the oil prices. Now, oil prices crashed in the last week or so in the month of November. The highest that the Brent crude oil went was $65.76 per barrel, and the lowest was $60.96. For WTI, the highest was $61.50 per barrel, and the lowest was $57.10. Okay, now let's move on and see the top 10 global economies performance in the month of November. Now, this graph shows that, and as you can see, there are few of the uh, red bars as well, and a majority of green bars, but not significant strength. And Brazil, you can clearly see the Brazil market is the clear winner with 6.37%, followed by Canada with 3.71%, and India, although did not give significant returns, but still, in context of the entire world top 10 economies, it has given 1.87% returns. But one thing that we have to keep in mind is that Indian market has not given any significant returns in last 13-14 months. Okay, other positive, Italy 0.42, France. So Europe didn't move actually as much. Even Germany was around 0%, negative 0.41. America 0.13%. Chinese and Japanese market actually gave very bad returns. China with minus 1.67%, and Japan, the worst performing of the top 10 global economies, with minus 4.35% returns. Okay, so now let's check out the final point, which is the future outlook and conclusion. So, Reserve Bank of India (RBI) monetary policy decision. Now, this is scheduled for December, and it is expected that a 25 BPS rate cut is on the cards. Let's see how it plays out. If it takes place, it would be a good news for the Indian stock market. If not, then probably not that good of a news. Next is the sectoral rotations and trends, and as we can see in the month of November as well, few sectors performed well, few sectors gave negative returns. So let's see. December is generally a strong month in the Indian share market. Let's see how it goes. There are center rally kind of things which have been observed especially in the month of December. So let's see how it unfolds. FIIs and DIA flows. Now this is critical. Always, every month it is critical for Indian market. And as we have seen, FIIs were net sellers in the November, and DIIs continued to buy a huge amount in the Indian markets, especially because of the mutual fund SIPs. Next is the strong domestic growth and corporate earnings outlook. Now GDP data has came up, inflation data has came up for India, and both were tremendous data. So there is a hope that December could prove to be a very good month for the Indian share market. Next is the global interest rate trajectory. There are strong possibilities now. So the possibilities or the probabilities fluctuate a lot in the month of November, but by the time November ends, the probability of 25 BPS point cut in by the US Fed is more than 80%. So let's see how it turns up in the month of December. And the final thing is the seasonality and technical levels. Now, as I said, December is generally a good month for the Indian share market. It is a good month for the international markets as well. So let's see how it turns out. Technical levels, Nifty is at its all-time high. Let's see if it continues to create new all-time highs, or it comes with the pressure of, or it is unable to maintain it. Let's see how it goes. So finally, to summarize, the Indian share market's performance in November specifically, it saw the Nifty 50 and Sensex hit fresh all-time high, marking a milestone after 14 months. But the monthly gain was modest, around 1.5 to 2%. The rally was extremely narrow, driven by a handful of large cap heavyweights and DIIs buying. There was no market depth at all, no market breadth at all, while the broader mid cap and small cap segments remain volatile due to elevated valuations and the ongoing IPO frenzy. FIIs are still net sellers in Indian share market. So that is all from my side in this video. Thanks for watching it. Please like, comment, share, and subscribe to the channel. Goodbye and happy investing.